It's awesome.
That looks like you just amped your testosterone by a good 20% with
Hey,
that.
my name is Carlos. Let's check the markets.
Well, with a surname like Mendoza, I think you can pull it off.
Mendoza.
Yeah. So what's the top line of the markets today?
This is the real me. Well, actually, in the markets, most people would have seen or are experiencing now that the prices have dropped on Bitcoin and a whole bunch of other coins. So we can take a look at that. Do you want me
Okay.
to jump straight into the charts, or do you want me to sort of go through?
Yeah, let's have a look at the just so that people get an immediate idea of where we're at today. You can also screen share. Of giving that permission.
Do
Hey,
that.
Crypto Amplify. Yeah, I love it when we have interactive viewers. Thanks for being here. Share one, share all, and
I'll turn off all my filters and stuff, so then that way it's not so distracting. And you can see my screen.
this. It looks like a Fidenza, actually. I'm sure we can definitely get some cool generative art based on these kind of patterns because they definitely start to look like generative artwork after a while with all the chart numbers
Yeah.
and lines.
I would love to see, I think we talked about this before. I'd love to see a generative piece of artwork that moves and flows with the market. So
Mm-hmm.
you can just see, like, it's a tree. And if it's growing, that means there's a lot of greenery happening.
Yeah.
Candles are on the way up. And then if the leaves start falling, you're like, okay, winter's on
Yeah.
the way.
I've got one of
But
those in the works. Yep, we're going to have that very shortly.
um, But okay, so what are we looking at here? Over here, we've got the Bitcoin USD chart on the daily. For anyone who doesn't know what that means, basically, over here, this D stands for 1 day, which means that these candles stand for the movement of the candle for a 24-hour period. So as you can see here, um, over the last couple of hours, right, Bitcoin's been going down, and there's still 16 hours left until the day is finished. So who knows what this candle will form? It could keep going down. It could head back up. We don't know, right? We're not predicting that side of things. All we're doing is basically looking back, looking left at history and seeing, okay, where could this potentially go? And as we know, Bitcoin sort of influences the rest of the market, right? Um, do you want me to go through like market cycles or
Yeah, well, I
the
mean, I think this is our very first
psychology?
time. We haven't been doing much market chat or any. So this as a focused one. Maybe if you sort of pull back and looked at the different micro to macro. So obviously, as you said, in the last few hours, we've had this dip. Maybe talk about. Obviously, there was this massive hike that happened between what was that in October, November, and then also maybe there's a dip in our winter, northern summer, and then maybe pull up, pull back. Just pull back, pull back, pull back. Because as you said, when you zoom out, you really get a context for what the true shape of things are.
Yeah. Well, I'll start from the beginning as always, I guess. Or is that too far back?
Well, I'd like to do in reverse. Like I like that we started with the last
Okay.
few hours, and then let's have a look at the last few months. Like, what's the flavor coming out of the middle of the year?
Yeah. Okay. So what I'm on is the weekly chart. So you can see here now these candles are worth 1 week. And so this week, essentially Bitcoin's been going down, right? But in saying that, the week only started yesterday. So when you zoom out, you're like, oh my God, crashing. But it's like, oh, it's just a candle. I mean, compared to these other candles where, price went from 57,000 all the way down to 42,000 and then recovered. Um, it can help you give a sense of perspective, right? That like, oh, actually, it's not that bad, you know.
And do you know who's
Um,
just joined the chat? It is one Daryl Beaton saying, "Let's go,
hey,
hey
Daryl, finally,
Daryl!"
welcome.
Yeah, what a great little trinity to have assembled here on Twitch. It's worth just for
Awesome,
your
awesome.
just to have this little triangle. It's worth starting this whole channel. Glad to have you here,
Yeah,
Daryl. Yeah, yeah.
this is yeah. So in a musical sense, this is playing a song and it's kind of like teetering on, and then over here someone's gone and had a solo, but then the guitarist has just dropped his guitar or dropped his pick, and then the rest of the band's got to pick it up again, and then now we're on the way up. That's another way to look at it. But yeah, in all seriousness, what's been happening is, over the last couple of weeks and months, you would have seen, or people would have seen, or heard in the news that, Bitcoin this, NFT that, like, metaverse this, with Mark Zuckerberg and whatever. So there's more visibility on crypto in general entering the market. So naturally, people are starting to ladder in, right? Or ape in is another term where people just like FOMO, like fear of missing out. And so all those little bits of curiosity that then lead to, okay, I might give this a punt. I might throw $100 at this, or 1,000 or whatever. That leads up to retail buyers like ourselves, buying into Bitcoin and all these other things. And then on top of that, the banks themselves, ever since, Bitcoin sort of cracked the $20,000 mark, around about here, start of the year. And, you would have seen in the news that, PayPal in 2018 was like, Bitcoin's going to zero. We don't believe in it. And then in 2020, they're like, oh,
we accept it.
yeah, we accept Bitcoin now. And then, other banks, like, was it last week or the week before, Commonwealth Bank in Australia has just gone, yeah, we've now got our own crypto thing. And so people are sort of starting to change their tune. And in the world of banking, big banking and finance, with the Bitcoin ETF, so an exchange traded fund, with that opening up, these sophisticated investors being able to enter the market, right? There's now bigger and bigger bags jumping into the market. So that's why we're seeing these candles that, compared to, say, the stock market or the Forex trading market, where you might see, oh, something went up a couple of cents or a couple of dollars. With crypto, oh, this thing went up a couple of $1,000s, or it went down a couple of $1,000s. And for people moving from traditional markets and traditional finance, these kind of movements are like big shocks for them, right? And it creates a sense of disbelief, I guess, and fear, because we've been so conditioned to these smaller ranges. And the same goes for general banking, right? Most of us on the call, or most of us listening to this, would have been used to the existing banking system of get 0.5%, or enter a high interest savings account with 4% per year or something, and we're kind of like, yay, that's great, awesome, the bank's so generous. We've just been so used to that. Meanwhile, in traditional finance, we've been sort of the veil's being kept over most people, where the banks are earning 14, 15, 20, 35, whatever percent, but we only get a small slice of it, right? But now that crypto is here, and more to the point, decentralized finance, these tools that are available for people, we're now lifting that veil and being able to say, hey, getting 20% on something or 40% on something isn't actually that unrealistic. In fact, it's almost par for the course, given the volatility in crypto. Basically, like, seeing these candles, the more you get used to like understanding the market psychology and market cycles, the easier it is to read what's happening in the market and to be comfortable with it, right? You're breaking through, like, if you imagine yourself as this tiny seed, in the ground, and you're breaking through, there's that little bit of uncomfortability breaking through the ground where you start sprouting. And in that moment of learning what this new outside world is. Sorry, I'm getting a bit esoteric here, but you're learning this world of crypto. It's like, oh wow, this is amazing. But then at the same time, an insect or a bird can come and eat you up, and there's a lot of danger to it as well. But as you keep nourishing yourself, keep watering yourself, and you keep growing, then you end up becoming a stronger plant, and then eventually a tree, and then all these other metaphors and analogies that you can draw to basically just means more. There's a saying that's goes, time in the market is better than timing the market, right? So if you're here and trying to I'm going to pick the top of Bitcoin or pick the bottom or whatever asset it is, that's not as useful as just being along for the ride and learning, okay, what happens when it goes here and when it comes down and all that sort of thing. Like, this starts off as gibberish. It's just like with music or dance or any other sort of art form or language. When you first look at something, you don't really understand what's going on, but then you learn bit by bit, and then eventually it starts making sense, and then you start to recognize the patterns. So
I found that with just the literacy through exposure is what I call it. You just sort of look at something again and again and again, and you start to decode the patterns. That's why I find it so valuable just to check in with the market every single day, and you start to get a sense of the movement. And the thing that I notice with systems of any kind is that fluctuation, oscillation is actually part of keeping a pulse. It's like your heart, it needs to contract and expand. So, I mean, it's different if you're a hodler, someone that's just holding on and you're just wanting it to go up, 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 up and up, and then at some time take your profit out. That's a bit different. But as you can see with the up and the down, you've always got this life pulse going through it. And if you're a day trader, you can be, continually making money, whether it's a bear or bull market. It's literally just like one of those there's cardiac machines in the hospital showing that there is actually life in the market.
Exactly. Yeah. It's never a straight line up, right? Obviously, if you zoom out, you start seeing the curve kind of smoothen out, right? You can see here that, for anyone, obviously, this is all old news. Anyone who got in Bitcoin at the start, they're doing really well now, right? And because of this sort of exponential growth. But if you actually go back in time, so I'll reset this and pull it back to when Bitcoin first started, right? And I've turned the candles off just so the red and green can be less psychological for us. But look at these charts. Does it look the same to you? Price was here, and people would have been like, "What is this thing? I don't really know crypto. I don't know Bitcoin." But then eventually people learned. Time through exposure. Is that what you're calling it, Atlas?
Literacy through exposure, yeah.
Through exposure, people learn. And these are the early adopters learning how to code in Bitcoin, learning the functionality. Eventually got some use and belief, but then people kind of ummed and ahed and went, oh, not sure about this. Maybe we hit a couple of roadblocks, sell some. And this is like what? It went from $140 down to $90.
And can you look at the percentage? That would have been like a massive drop at the time. What is it easy enough to get the percentage drop?
If I do this, so I'll just turn the candle on. Actually went up to 259.
Oh yeah.
down to $63. So that's a 75% drop. See this middle number here?
Yeah, wow. So in that moment, drop. It would seem like catastrophic, falling off a cliff, 75% down. In the normal investment market, that would just be, jumping out the window time. And then when you sort of pull out at that little dip, it is literally just a little momentary down before it continues upwards.
So that was over a month, right? That period that's highlighted in blue, the price went down. Well, you can actually see in one particular week, it went up and then, all the way here and then came back down, right? I'll make this easier actually on green and red candles. So then, oops. For those, I won't get into technicalities of what these candles mean.
Can you talk about the columns you're seeing at the bottom of the screen as well as the candles?
Oh, that's the volume. Okay, so basically what this shows is that this is the volume of money going into the market to place orders to either buy Bitcoin or sell Bitcoin, right? And you can see here that as the volume grew of people buying in, so did the price, right? Because when someone buys something, price rises, and then someone wants to pay higher, and it keeps going up like that up until it gets to a point where around here they're like, oh, okay, I think I'm going to take some profit now and sell, and then price comes back down, right? And in this case, over the course of a month, Bitcoin went down 75% from $240, was it, down to $63, right? But then because of that, people, it didn't go all the way to the bottom, because obviously there would have been functionality and things built into this and other people holding. So then eventually it climbed back up and then gained, even more belief as more people learn the technology, learn the language, improve their literacy. And then you can see there, right, the growth that happened there from, if I use this tool again. So from this bottom bit, when, Bitcoin's going to zero and there's panic and whatever else, then it grew to 1,746%.
Wow. Yeah.
Right. And then same thing happened, the same cycle, same psychology of like, okay, this is too good to be true, right? And then over the course of, you know, another month or two, again, it dropped down, and then that was 70%, you know, down, and it tried to recover a little bit, but maybe at that time the technology just wasn't up to scratch yet. You know, we're talking 2013 to 2014. If anyone can even remember back in the day, you know, we were only on like iPhone. Well, was iPhone even out? No, iPhone. I can't even remember, but we were still back in iPod land, right? Who here has an iPod now? Like, it was still early days. And then, yeah, over the course of that year, it eventually bottomed out, losing 76%, right? So pretty much the same percentage as the previous drop, but just a larger proportion in price action, right?
I
Because
think
over here,
that's such a key thing, particularly for people just getting into the market and looking at these big amounts. You know, we're looking at, you know, Bitcoin now around 60K plus, and it seems like a huge amount. And then you see something else which is worth $1. Oh wow, it's so much cheaper. But it's all about the relative costing. So, you know, even if Bitcoin goes up to 100K, that's still not even double. Whereas if a smaller coin is at 50 cents and it goes up to $4, you've actually made a relative percentage gain that's larger. So here, that's, I guess, the thing, these parabolic rises early on, you can get 1,000, 2,000, 4,000 percentage up. But when you start to get bigger numbers, even though the dollar number changes, your percentage of win or loss could actually be similar.
It's relatively the same. Because you're just losing. It's just value on paper as long as you stay in the market, right? And then that eventually, you know, kept going until the very bottom, where maximum loss was 86.9%. But for those who stayed in the market, or took gains or traded or whatever, you know, it's not really much. And then we had the run from 2015 up to 2017 mid year, right? And that was 785% up. And then I think there were a lot of people that might have been introduced to Bitcoin at that time, you know, mid-July or whatever. And then that's when we had this sort of parabolic run where, you know, look at the losses from back here, right? They pale in comparison.
It doesn't even look like it went down at all.
Yeah. This was the run that a lot of people who are, you know, in crypto would have been in, and that went up 12,804.2%.
Wow,
like ridiculous numbers, right? We went from $152.40 all the way up to 19,666. So again, there's that, you know, mentality of like, oh my gosh, this thing's going to the moon and everything's great and blah 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 blah. You know, the bull market sentiment, there's euphoria, there's a thrill, I know tons of people that made bank during this period here, the 4 weeks or so leading up to Christmas, December 2017. A lot of people I know bought cars and houses and all this sort of thing, and they rode that wave without really understanding the market. And then obviously after that period, the same cycle happened, right? People take profits and take money off the market. They take money off the table, which means the price starts going down, and like people start selling, and then they panic and they're like, oh, this thing's going to the floor again. And then we ended up back in the bottom here with 84% down, right? But that period, look at that. It took from the 11th of December all the way to the 10th of December. So a whole year of the market sort of heading down, right? And whatever happened in that year, you could have put your money into, you know, other things and other assets to be traded.
And you've also got higher lows. That's one of the key things looking at these things, is like the higher highs, higher lows. So even though it's going down and crunching, your support is rising. So the support is basically where people have their, you know, orders at. So, you know, it's valued at that much. So it comes down to somewhere. In this case, it's around $3,000 or something. And people are like, oh, well, it's definitely worth $3,000. And there's enough buy orders that it provides that bedrock support. So it doesn't go lower than that. So even though it's crashing, you can generally see that the overall sentiment is that there's faith and there's trust in it. And even though it is going down to quote unquote the bottom, that low is a higher low compared to the previous lows.
Exactly, yeah. So these bottoms here, you can see they're gradually, moving up. And then from there, we now go, okay, there was that first wave of, excitement, and people were like, hey, Bitcoin's heading back up, 2018 to 2019, but it was a little bit too early, right? Again, Bitcoin is based on blockchain technology, which, as we all know, with technology, like, it takes time to innovate and flesh things out and come up with products, right, that are useful. So that was a bit of a letdown, I guess, mid-year. And then unfortunately we got stuck with COVID, right? That was March and March 2020, and the whole world basically went into lockdown. But then coming out of that, you had so many people getting into trading, looking at things more. Maybe people, being out of conventional jobs, suddenly realizing, hey, technology is where we need to be looking at, because that's where the development's happening, that's where innovation's happening, and we also can't leave our houses, right? So that basically carried on up until we broke through this previous high, right? The 19,666. And we ended up, boom. Once we broke through that, the belief kicked in again. There's the thrill of the ride and all that sort of thing, until just last April 12th, we ended up at a high of $64,895 US. And again, a gain of 1,978%, right? And then again, same market cycle, same market psychology. People went, whoa, 60K, maybe a good time to take profit, right? So then price dropped down. But look at this. It's only so far gone down to 55.93%, right? In comparison to all these other drops where we've been hitting roughly 86 or 84%, 75 down here, right? If you think, okay, if this is the top, which clearly it isn't yet, because you can see here that we've created a candle there, but say at the time you thought, okay, Bitcoin's going down from here and it's going to lose another 86%. Let's say 90%. Say it loses 90% of its value, right? That would still be valued at around about $6,400, say $6,400. You can see on the right, right? I don't know about you, but I would love to still be able to acquire Bitcoin at $6,400. So for me, because I'm a crypto maximalist, like, I believe in the technology, I believe in the price value and the usability of not just Bitcoin, but the other technology that comes out of it. Then to me, that's a bargain, right? Yes, of course, it's uncomfortable to feel this kind of, drop or the wilting or the roller coaster dip, right? But if you know what to do, if you know how to play it smart, then you can stand to make a lot out of this. If you were actually to go and think, okay, this is the top, and now we're crashing down 90%, that still puts Bitcoin at 6,500. Roughly 6,500. And I don't know. I'm bullish, and I just don't think we're going to see that anytime soon. As you can see, these candles are weekly candles, right? So this stuff doesn't happen overnight. Like, you might have crashes like this where the price here, when people exited and got liquidated and whatnot, in span of 2 weeks went down 49%. Right?
Can you, just to catch that, you just said when people got liquidated, can you explain that a little bit further for those who aren't familiar?
Yeah, so liquidation. So let me show you how trades are kind of made. So say you were back here, right? Let's just rewind this. Let's do the replay. Okay, we've had this crash, right? And this tool here will simulate what putting a trade position looks like going long. Like, say you saw this crash, and then you jump on a exchange and you go, oh, look, it's turning back around. There's green candles, great. And I'm gonna enter here. I'm gonna buy Bitcoin here, and I'm going to wait until it reaches the top of this candle, right, to take profit. And I'm going to set my stop loss. So setting a stop loss is basically setting a cord, on your parachute to go, if the price reaches this price here, 30,000, I'm going to pull the cord on the parachute and just get out of the trade so that I don't continue, losing money as this goes down. All right, that's kind of your exit. And what most people do is do that sort of thing, or they take risks and go, since the price dipped down here and then this next candle is up here, maybe I'll just set the parachute here because I don't want to lose anymore, right? And yeah, Bitcoin's going up. But if we play the candle, I'll play the replay. Sorry, you see, you would have been in like, yes, it's going up. No, shit. Okay, so see where the price hit that target, right? Your trade would have been taken out of the market. It would have been liquidated, right? Meaning that you would have lost whatever money you put into the position to place on this trade. And so what happens is because there are retail traders or just traders in general that they're beginners and they don't really know how this sort of stuff works. There are institutions and other traders that they do what's called stop hunting. So they can see, because all this data is on the market, right? You can actually see like heat maps of where are people placing their trades, where's most of the money, where's the volume. Remember we were talking about these bars here, where's the volume happening? And then they can pick, everyone here is thinking that it won't go below 32,000. Let's just push the price down a little bit by selling our bags so that the price comes down, and then they end up buying these dips, right?
Yeah. Even thank you for Dos Twitch, a new follower just joined us, so thanks for following us. Yeah, cool. So keep going. Yep.
Yeah. So then, even if you okay, so there's another example. Even if you went, okay, I'm gonna trade, below this candle here. There's another example of being stop hunted, basically, right? So then again, more people would have lost their positions, but smart traders would have gone, well, looking back at history, you can see that the price was dipping down to these levels. So that's actually where you would be placing orders to buy. And you would have been familiar with this with doing the course with us and stuff like that. Like whenever this stuff was happening, most of the time my buy orders were like way down below, and people were like, are you sure it doesn't look like it's going to go there or whatever. They were like, yep, they're lucky dips, right? I call them lucky dips.
I saw that happened recently with that Binance mistake, but someone ended up buying a Bitcoin for what was like $8,000 because you have these random things, and if you've got those buy orders positioned down there, if it hits there, you snap it up automatically. Yeah,
exactly. Yeah. And you can see there, by the time it actually took out these people, took out those orders and took out these orders, by the time it got down there, that's when it started shooting up again, right? So this level here, see how if you look left, you can sort of see that's the same thing that happened here. So had you or had anyone placed a trade sort of around those levels there, then that would have been a smarter way to trade or be able to get the most gains. But again, this is all in hindsight, right? It's really tricky emotionally to pick these places. It's tricky to pick these places when you haven't been in the market and you haven't read the literature, so to speak, or learned the language. But as we know, as creatives or musicians, like the more familiar you are with a piece of music, the easier it is to read other music, and then the easier it is to also improvise, right? Mm-hmm. And that goes for any skill or trade craft. And then so from there, that was that bottom. We created what's known as a floor. You could say that is a very, very large support level or support area over here, right, where that yellow line is. And then we tried testing it again. Let me just turn this off. Oh, wait, fast forward, faster. So where are we now, right, in the market? Okay, so you can see there, anyone who would have traded that or is still in the trade would have made more than 86% gain had they bought the bottom there. So in the same way that these floors are created, the support levels are created, we also have resistance, right? These ceilings that as you would have seen in the past, we have this top, breaks down, and then these ceilings get broken again, or these resistance levels. So back here, remember when we were doing this, that was the top there, and then this was the resistance level, or the all-time high, right? And then now this was our all-time high. Oops, there, that one there, 64,895. And you can see that we broke through it, but not very convincingly, right? Because we're in this mode of what's called price discovery, where Bitcoin's never been at this price before. Like, who knows? Like, who wants to buy a Bitcoin at $70,000? It's the same sentiment that was back here at $20,000. People are like, really? Would you pay that much? It's the same sentiment back here when Bitcoin was $100 or $1,000. There's always this period of uncertainty. We're dipping our toes in the pool, going like, is this a good deal or not? Like what is this thing? But as we can see from the news and the banks and the reading the entire market, more people are getting familiar with it and learning the technology. And it's not just about Bitcoin now. It's about all these other products and protocols in place as well. So yeah, so where we are now is this price discovery, and we're testing pricing here, but we're in this huge range where price could suddenly come down here and then head back down to the 30K, and we could test this area here because we tested it there, we tested it there. There's no reason why it wouldn't potentially test this area again. Or it could also come and test this previous area here, which was kind of like the range of where we were high before, the general resistance area. And then all things, happening, it could be, a bullish scenario where price, continues up. So what we do as traders or in reading the market is we basically try and figure out what's the probability of price going this way up, or what's the probability of price going down. And then we create strategies to go, if the price goes up, this is how I'm going to jump on the elevator and exit that elevator. If the price is going down, this is how I'm going to put my parachute on, go for the skydive ride, and then pull the cord so I can still land safely, right? And so yeah, trading isn't just a mono-directional thing. You don't just go, yeah, up only, we're heading to the moon, and that's it. You plan ahead for different scenarios, and then you make your best decision or best probability guesses and strategies to figure out what to do. And then there are a few tools, and I mentioned before, like patterns and things that you could look at. I don't know if I should go into detail in this call, but one thing I can sort of tell people, which is a really easy thing to do, is use this particular indicator. So if you don't know anything else about trading, right, there's a super easy indicator that you can get on this free version of TradingView called the bull market barrier, right? This only works on Bitcoin, so I wouldn't use it for any other asset. But basically what it is, it's a combination of different mathematical equations, I'll say, that measure the market and then indicate to us. So if we go back to all this, right, I'll get rid of, I'll leave those things on. You can see here, right, that from a very like beginner's perspective, you don't understand anything else. You just look at the bull market barrier, which is this ribbon here that goes between blue and red and yellow. You can see here, every time that the price has managed to cross up over the barrier and is in the blue, then we're in a bull run. Price is heading up. Whereas when we cross below the bull market barrier, right, then we're in a bear market and price is generally headed down, right? It's pretty easy to see. And every time we hit this bull market barrier area, there's always a period of moving sideways, or this period of uncertainty. It's like, oh, are we going to break through? Is this the plant that's about to sprout? or is it you know, dry season and it's going to die again or something like that. So you can see that here, you know, when price came back down here, this first little test of resistance, it came back down, but then the market quickly recovered and it's like, okay, full steam ahead, let's go. And you can see these sorts of areas where the candles are a little bit bigger, breaking out of this bull market area, right? The bull market barrier. And then it's come back to test it every now and then, but then, you know, super simple sort of indicator, right, that you can see. And then when you zoom out exponentially, same thing happened, 2017, right? Came down here, a bit of sideways movement, and then eventually, oh, we're back below the bull market barrier. And so, yeah, it wasn't a very good season. I mean, there's, you know, you still could have traded this if you were a day trader, but that's like a totally different strategy or set of strategies. But this is just, I'm just showing people, like, overall, if you don't know anything else about trading or you're just starting, this is something really simple that you can see. If we're in the blue area, cool. It's you know, a pretty, I don't want to say it's a safe bet, but it's a pretty good indicator that, like, okay, things are still heading up until we cross the barrier. And then right now we're in that zone where you can see when the price dropped in May, right, we broke straight through that barrier. And then we're in this period where it's like umming and ahhing. We tried to cross through the midsection of it, but it got rejected at that point. But as Atlas was saying before, looking at market structure, so higher highs, higher lows. So this is a low, and then this is a high. So the market moving up like that. This is a higher low because this low price is higher than this price here. And then this is a higher high here. So you can see that if I go, okay, this is a low, this is a high, this is a higher low, this is a higher high, because this is higher than this, right? So if we end up coming down here and forming a higher low, as long as that low is higher than this one, then what can we expect? That the pattern continues and there'll be another higher high and then another higher low. So it happens like this until eventually the higher high either breaks and continues making, you know, moves, or maybe a low ends up breaking and becomes a lower low. So if this is the price level here and this becomes lower there, then that's our indicator that, hey, market structure has changed, right? So if I go back here and if I drill into what happened in May, right? You can see this really easily. If I go down now to the daily candles, is there anyone in the channel that's like lost or asking questions or?
No, I'm looking for questions, but no, there's nothing in particular about the charts at the moment.
Okay, so if I go back here to just before April, right? And I'll just turn the line chart on so then it won't be so confusing with the lines. What can we see here, right? We had this high form over here, this low. This is a higher high. This is a higher low. Another higher high. But then what happened here, right? The low that was forming there ended up breaking down and we formed a lower low. You can see this low is lower than that one, which then indicated, so for anyone who didn't get off the train at this point, so what I mean by that is you would have been able to see it. So, you know, drawing patterns, right? We talked about drawing patterns. This was a pattern called an ascending wedge. Let me show it here. So for anyone trading this, seeing the price breakdown here would have been a sign. Actually, the early sign is the price didn't break past this line here, right? Actually, it's this line here. Sorry. That, right? We were moving up in this channel, higher high, higher low, higher high, higher low. This higher high didn't quite make it to the top, right? Even if I turn the candles on, you'll see it didn't make it to the top, right? So that would have been an indicator for the early traders or investors to go, okay, we've reached the top, time to pull out, right? And then over here, as they started pulling orders off or starting selling orders, then the fact that we broke that wedge or that channel meant, okay, this is actually going down. And then so that's why we had this lower low form, right? And then what usually happens is when something like that happens, there's a dip in the market. So what do most people do, right? We get taught buy the dip, right? So people would have bought there and traded this up. And then you can see, like, you know, even within a smaller pattern, there's a high, a low, high, low, high, low. So this pattern here is actually almost the same if you do, like, you know, drawing the tops of that compared to the previous channel where you've got the low there, right? You can see high, low, high, low, high, low. It broke, and then boom, that's when, you know, we started going down, and then there was more panic in the market and whatever else. There's a saying as well, when in May, stay away, and you can see that mid-May. It's just a thing in the markets, you know. People go on holidays, people spend money. It's the middle of the year, summer, and somewhere halfway in the world. It's just a natural occurrence. But obviously, if you haven't had time in the market, these things will shock people. You know, the literacy of, like, you know, just joining in and going, oh yeah, I heard about Bitcoin in January. Oh, I'm not sure. Oh, someone told me about it in February. Okay, maybe I'll jump in March. Oh, great, it's going up in April, and then all of a sudden May it tanks, and you're like, oh shit, like. No. you basically just have to hang on, right? You have no choice but to hang on unless you sell. But, like, again, it's kind of silly. Like, there are ways to mitigate that risk, but I'm just trying to relate to people because I've been there too, right? In my first couple of runs. Anyway, so now what we're seeing here, again, same market structure, right? High, 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 low, high, 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 low, so on and so forth. Over here, when the low broke, so actually, I'll draw these as triangles because then it's a little bit easier to see, right? You have your low, you have your high, your low, your high, low. So yeah, you see that broke the channel there. You could even, I don't know, do this, right? Something like that, right? You see it broke the channel and then headed down. And then what's happening now? Right, same sort of thing. We're in this pattern where there's well, I'll use this lower low to play out this triangle. Right. We've got like a kind of wedge that's forming, and we've just broken through that triangle. So then naturally we're heading back down to where potential support has been before. So if I clear this out now. Sorry, we talked about support and resistance, right? In previous history, if I turn this bull market barrier off, right? What can you see here? That when we hit this price here, right? And let me clear all this. Sorry. Delete. Okay. So see this area here, how previously, right, if I extend this left, right, this area was kind of where things were topping out, right? In market structure, people were still like, you know, will Bitcoin make it to past $60,000? Oh yes, it did, great. Will it make it to 70,000? Like that's the kind of mentality behind it. But obviously it didn't make it past that. It came back down. But then more people bought. A lot of banks and institutions started buying up around this level. You would have heard of MicroStrategy and all these other, you know, big institutions, and the Elon Musks of the world. And then when we finally broke through this level of resistance over here, right, we've made new highs, all-time highs, and we're in that position now where it's just trying to crack $70,000. So naturally, for anyone who's already made profit during these movements, it makes sense to take profits at these levels, come back down to, okay, where was it supported last time? Where was the ceiling that broke through last time, right? Which is roughly around this level here. And you can see that on this particular candle, right, when price first broke through this all-time high, right, of 64,000, this yellow line, it broke through, came back down, and then it retested this level here where people were you see these blocks that basically it's like called an order block. This level here where people were umming and ahhing, but eventually the bulls won. They pushed the price up, but then it tested this level to try and grab more orders here, so other people could jump on the train. And that's essentially what's happening now again, right? So we'll hit this area here, right? It could go down as low as 56,000 or 58,000, or it could even bounce back at 60. So this whole area here, I know these numbers sound like a huge range, but again, relatively speaking, compared to stocks and Forex, it's par for the course in Bitcoin. So now if we turn on that barrier, you can see it makes sense that while we're umming and ahhing in this yellow zone, right, it could potentially bounce off this line here that's forming. And again, I just want to pay attention to the fact that there's still roughly 16 hours left on this candle. So this candle could suddenly shoot up and become green, or this candle could suddenly come down over the next 16 hours and be like a really long red one. We don't know, right? But as traders or as probability hunters, we're looking at what's the probability of it potentially coming back to these levels where it's tested it before. Worst case scenario, it comes back down somewhere around here.
And just to slow down just for a second to to address about the candle, for anyone who's very new to reading these sort of charts, it helps because you've got these different spikes and why is it red, why is it green? And so basically the bottom of the candle means when that particular time frame you're looking at started. So you can look at it from a 5-minute candle, half an hour candle, a day, a week, whatever it is.
Yeah,
so
this is 1 minute.
Yeah, whatever particular time frame you've chosen to look at, when that time frame started, so the next minute, if you're doing a minute candle, when the minute started, it takes it, and then it looks at, is it going up or down from that particular point? And so if it's going up, it's a green candle. If it's going down, it's a red candle. And when it closes, so in this case, if it's a minute, when that minute ends, that's the correlation point. So compared to the minute before, was it more or less? And that dictates the color. The wick, that little spike that's either up or down, is like the highest it got to or the lowest it got to in that time period that you're looking at. So hopefully that makes sense for people that are not familiar with these candles.
Yeah. It's a really good explanation. And then it's good that we were doing it at the same time that you were talking, because then you can see it happening here, right? That candle was green while you were talking, and then in that minute, it just changed to red, right? So for people trading high, what's called, high time frames, lower time frames. Like right now, we're in 1 minute candles, right? Each of these candles represent a minute. And as I'm talking, you see it going up and down, right? You see the time here. And let's just watch it for a bit, but you see that that's the price that the market is prepared to buy or sell the asset, right? And so when we're trading, we look for things like waiting for the candles to close and these patterns to confirm what's the probability or what's the likelihood of the direction. It's almost like say you're lost in the jungle and you've got a compass, right? When you first pull your compass out, the needle's kind of all over the shop, and you have to sit in stillness and wait for the needle to settle, and then you dial it in and go, oh, okay, that's where north is. Right. And that's kind of an approach you take with trading. You don't just go pull the compass out. Oh, okay, the needle's pointing here. I better go that way. Right. You look for signs. You might even go, okay, that's north. But even though the compass is pointing north and that's where you need to go, ahead of you might be a mountain, or ahead of you might be a lake. So then you go, okay, what's my plan? What's my strategy? I need to turn left or right and go around the lake or go around the mountain, or I'm going to climb it. So it's a similar sort of strategy with trading, where when you zoom out, so the saying I say is when in doubt, zoom out. If you zoom out to the monthly candles, right, you can see exactly where we are. Let me turn this barrier off, sorry, just so, and reset. Reset there. Right, for this month, you can see there's 14 days left to go, and this candle is still forming, right? So you're not going to see much movement. but you can sort of tell, okay, we're halfway through the month. There's this big wick here, which means price came up all the way there, but then it's now coming back down, right? That's not to say that it's good or bad. It's neither here nor there. This is just the movement that's happening. The same thing happened here, right? Price went up, came back down here, and then ended up settling, at this level here. And then the following month in May, that's when the big drop happened, and we went boom all the way down here, came back up and over here, and then the next thing you can also see it for some people who like using what is it, bar charts or bars. Here we go. You can see how that connects, right? Price, in this case, price started here, came down to this point, came back up here, then came back down here. You can sort of see the ladder happening. So I don't know if that's just confused more people, but you can see how it's moving. So once you zoom out, you can get a general feel or a general idea. Okay, this is where we're going. This is where we're heading, right? No need to panic. And then as you zoom in further and start, figuring out different market structures, different patterns and all that sort of thing, you can start to then make educated guesses as to where price is moving, what are the probabilities, what are the strategies to get there. And then you can trade, like I trade 1 minute time frames. I trade, 1 hour time frames. I trade all different levels, I guess, just depending on what I need to do. So like I kind of use the market and my trading as, like an ATM almost, right? If I need cash immediately, then I do short-term trades. Whereas if I'm trying to build up my capital, I'll do long-term trades, right? And then don't touch my money. And then that gives me the freedom to then put my time and attention towards other things like NFTs and DeFi and all these other things in crypto, all these other things in the market that have got nothing to do with trading, right? But they're all about creating and doing all these other things. So essentially trading and money and reading the market is just a tool, and it's just a, it's just a useful thing for me to have learned to then go, okay, I learned that language. Now I can travel into all these other worlds of the cryptoverse to then start spreading that language around, start conversing with other people in, creating something new.
Wonderful. I love it. I love it. That was a great, right from the beginning of Bitcoin. It was like the entire music collection of a band, or the anthology of the life's work. So this is the Market Chart Chat. We'll be doing this every single week. We're talking about candles. Our candle is almost closing. We're almost at the hour mark now. Thanks to those of you who've been with us this whole time. And also in between sessions, if you want to join the Crypto Collective Discord, you can by all means ask questions in there, and there's plenty of people, mentors, and access to Kevin in that space as well. But hopefully from today, you're starting to see the rhythm, and as Kev said, this is just one language within the cryptoverse. There's many other things. There's DeFi, there's NFTs, there's all sorts of aspects. But for me, this really does feel like the work of it. This is the place where you can feel the pulse of the community. Obviously, things like Bitcoin, Ethereum, and their particular USD value, which is also something we can discuss. Do we always want to correlate the value of a cryptocurrency to a fiat currency like the US dollar? It does make sense if you need to pull it out and then to interact with the world beyond crypto, but that's only one of the measurements of a up or down sort of experience that's happening. However, it is something that is continually happening, and you can get in there and be on the tools, so to speak. You're going to be in the gutter there, digging out the leaves and stacking your sats, your satoshis, and sort of really making a living doing this as well. Particularly at a time like this, when for you, Kevin, there in Thailand, who has very much a face-to-face business with an eco retreat, a giant eco resort. This is the saving grace, that sometimes when our face-to-face businesses have the squeeze put on them, how else can we actually have recourse in the metaverse beyond borders to actually make real world money and pay our bills?
Exactly.
Yeah. And I also love the fact that you're a musician, and we can always bring it back to analogies like music and jazz and improvisation and growing trees and all these sort of things. So yeah. Hopefully you've enjoyed this. Please, share this out. We want to get as many people on board as possible. We're almost up to 50 subscribers now, or followers
Oh, that's awesome.
on Twitch. So that's
Awesome.
amazing. And we've only been going for about a week. So yeah, let's grow this community. Let's get in there and co-create in Discord as well. Also welcoming people to come on board and have a chat with me on the appropriate day. I keep threatening to put out this regular schedule. We will get around to it, but we do have a schedule so that every day there will be live streams, usually in my evening New Zealand time, which will be, I guess, morning, often in the north. And thank you so much for being here, Kev, and bringing your bountiful wisdom. And we'll be looking at many other aspects of the market. So in the meantime, ask us any questions. And other than that, we'll be looking at the pulse every week on a Tuesday and seeing what the market's doing.
Awesome.
And then we have a question here, which I don't think you're going to answer, but I will put it to you anyway. Just saying here from new subscriber Dossie's Twitch, I just missed the last 10 minutes. Did Kevin have a suggested buy price on the current BTC drop? Tell us.
I don't have a suggested buy price, but that range that I mentioned is what I'm looking at. So again, you can either turn on that bull market barrier and see, okay, towards the bottom line or the midline, that potential sort of, between somewhere in the high 56,000s to 58,000s, that sort of area is personally like not a recommendation, but where I have certain orders sitting. And yeah, again, I look left and just see where has price been before, what's the likelihood of it potentially reaching that level again, or wicking down, grabbing these lucky dips, as I call them. And yeah, those are, currently in the short term, that's where I'd be looking to get in. But also, as I said at the start of the call, even if Bitcoin goes down to $3,000, I will be buying it. Like it just makes sense, right? For me anyway. And then also all the other coins and all that sort of thing as well.
Yeah, we had a thanks from Athena Elizabeth Watch. She said, I'm super fresh here. This was so amazing. Thank you. Awesome. Thank you. Loving helping on-ramp people into crypto. So glad you found value in it. Cool. And then there's thanks from the question answer saying, awesome. I appreciate your take on it. And then also a thanks from Stingray. Awesome. Well, I like this conversation. Thanks for being alive in the chat as well. It really makes a difference because we're here, giving it out, and it's lovely to know that it's landing. Awesome. Cool. Have a great night, everybody. And we will see you again tomorrow. Tomorrow is Wednesdays. So I think I'll be on with Troy. We'll be doing Trending Wednesdays and looking at what's happening in all the world. And if it's Troy and I, we will probably be talking about NFTs and gaming. All right, big love. Thanks for being here, Kev. And awesome. Big love. Thanks for playing. Bye.
Bye.